I mean, of course, I would love to be able to know when to stop it, to not get a drawdown, and then open it again. But that's almost impossible. So I prefer to ride the whole wave, and that allows me to benefit from the profits. But that takes the discipline and the courage to stick through the statistically normal drawdowns.
Today I'm sitting down with Alejandro Perez, a full-time algo trader working in the reserve trade. I want to ask him a few questions about his algo career, a few things about running algos, trading full-time, and raising capital, of course. So good to have you here, of course, in Hong Kong. Good to sit down here. He had a lot of progress the last year. I mean, the last 2 years, like we've been running algos more and more, and he has some good progress. Tell me a bit more about kind of what do you trade and what do you focus on?
Yeah, nowadays I'm trading mostly algos. I have branched out a bit to manual trading again, just because once you are running algos, part of the running algos it's do nothing. So it can get a bit boring sometimes to run algos because you don't have enough stuff to do as as someone that loves trading and loves this business. It can get a bit boring if everything is running fine and you have nothing to do there. So I have been trading some things on manually, but I have been most of my profit now comes from the algos.
Do you feel like trading algos, you kind of lose touch with the market? Like you don't get involved enough in the market and you don't see any moves happening much. Like you just look at the results. We'll talk about this in a different video, but you say you should have to be manager of algos and then like a trader basically when you trade algos. So do you feel like you lose touch a little bit, and kind of how do you solve that?
Yeah, that's partially why I went back a bit to manual trading, not necessarily full size or trading a lot manually, but it was in part because all I was doing as algo manager was looking at the big picture of my algo equity curve and then looking at how it compares to what I should expect and how it's going. But I don't necessarily look at every single independent market the algo is trading. So there were times in which we had members and then people were asking about specific market or something like that. And I would be like, well, I have no opinion on it because I haven't looked at charts for that market in the past 4 or 5 months. So I may know what's happening due to world news and things like that, really broad strokes about maybe happening. But if you ask me oh, hey, this chart looks pretty good or this specific thing looks pretty good, I sometimes was like, I have no idea. It looks good. I don't know. My algos have been doing great this past week. Maybe that's why, but I don't really know. I just know that the algos are running well. Everything is good. We have 15% up, at that point in the year, and everything is running. So that started to happen enough that I was like, well, I need to get more in sync with the markets. And that not necessarily has to do with algo trading, doing more stuff with algo, because that can lead to over managing the algos. So that's why I was just, how to keep in touch with the market without negatively affecting my algo business. It's to just trade really small size with my manual trading, just go back to manual trading, analyzing charts, kind of go back to basics of manual trading, and just keep it there on the side to keep a finger in the pulse and see if the markets are changing a lot. Then that could indicate me that maybe the algos may be having an underperforming time later, or that could give some reasons for that.
What kind of strategies do you focus on? Is it more reversal, more trend based, and how does that play out?
Yeah, for my algo portfolio, I have both. I have the strategy from you, the following command reversal strategy, which is a reversal strategy that sometimes it's traded in some of my parts of my portfolio more as a trend following, only with the trend, but it's like the overarching higher time frame trend. And whenever there is a big pullback that creates a reversal setup in the direction of the bigger trend, then enter. And then I also have Secretariat from Michael Thomas, our other coach, which is a trend following strategy, which it's pretty good at catching those trends in getting up into pullbacks of the trends and getting into. So those two together tend to balance themselves.
Yeah.
The BDR, if it's too filtered, tends to have less trades. And the Secretariat, if you let it run, it can have a lot of trades. So kind of balancing themselves with different filters and different things. And they help each other perform better together.
What kind of time frames do you look at?
Yeah, for the past years, I have been mostly focusing in the H1 timeframe, just because that offered the easiest balance between good amount of trades, good sample size for my analytics of trades, and a relatively stable price action. It's not too noisy compared to 5 minutes, a 15-minute chart gets a bit more noisy, and the data is a bit better for 1 hour. And if there is any issue with the data provider or anything like that, if you're missing 1 minute of data in 1 hour, it's a lot less impactful than if you're missing 1 minute of data in a 5-minute chart. You already lost 1/5 of your data. So that can be a pretty big impact sometimes. So I had that balance. But now with the updates I have done to the algos migrating to 25, I am exploring a bit more again with lower timeframes to creating a more dynamic portfolio that can have a bit faster responsiveness to market changes.
I mean, you had a really, really good run with algos this past year, but you also had drawdowns. Tell me a bit more about the drawdowns you had and how you handled them.
Yeah, so for most of the year, it was doing pretty good. We had some really good runs, but then there was one point, I think it was after summer, in which we started to have a drawdown. And part of my rules as an algo trader is I don't touch things unless they break my mostly risk-related metrics. So one of the first things I had to do with my portfolio was to exclude one single symbol. So not the whole portfolio, but just one symbol, which went really good, made like by itself 25%, but then it went into a 15% drawdown. So it still was up in the net, but it went past a drawdown that was outside of its risk management bands that I have for it. So the historical backtest plus the cushion that I have for them for, understanding that no backtest is perfect. And it broke that. And as soon as it broke that, I got a notification on my phone and it has to be excluded from the portfolio and the portfolio continues. So it's not always, super nice and not always going to be going up. You have your drawdowns and you have rare cases in which you have to do management. But the other part, which it's sometimes harder for me, it's when you have small drawdowns that are perfectly normal, perfectly within the parameters. It's all part of the backtest. It still looks the same as before, but you are like 1 or 2 months in drawdown. And it's just like a 1-2%, like the whole portfolio is down like 3-4%, and it's just slowly going down, but not passing any of those metrics.
Yeah.
And it's something that you have to stick. It never feels nice. It's there, but it's something that you have to pass and learn to stick with the strategy you trust, stick with the statistics, stick with the data you have gotten, unless it breaks those parts. So we had that, I think, at the beginning of the year, actually, before we had a really big run with the portfolio. I had that in which it was, it's never nice to lose 1 or 2% a month for 3 months straight. But if I had done any change there, just because I didn't like having a slight flat and down months for a few months, I wouldn't have been able to profit from the 20-30% run that we had 2 months afterwards. So that's why you stick to it, and that's what makes sometimes trading, every type of trading, difficult, because if you do not know what's normal for your portfolio, what's normal for your strategy, you see like that and like, okay, stop working, it's not working anymore, and then you just miss the big run, and you are only materializing the losses, but you are never being able to participate of the profits. So
And a lot of people face that too, because they feel scared to like let the algo run and with no profit, or it goes sideways for a while, or they have a small loss. I mean, what happens in those drawdowns? Do you tend to doubt yourself, or do you just let it run and you're good with it now?
At the beginning, it was really hard. For my first couple of years algo traders, those drawdowns were really hard to bear. Mostly because it feels like a slow drain, and you are thinking like, did it stop working? Did my backtest wrong? There's something wrong. But over the years, over the past year, like this year specifically, was a lot easier, because the previous year I learned, because I basically did my whole, again, backtest process, my whole process, and like trying to see like, did I make any step of my process wrong? That could mean that what I was doing is not likely to be working anymore.
Right.
And you showed me that I did everything right, and luckily that practice process took me long enough that by the time I finished, the drawdown started to revert, and then I was able to pass and then get the next leg up. But that's some process that can be hard for someone that has never done this before, or that maybe also struggles with strategy hopping in manual trading, because you have the same impulses with algo trading, in which you're feeling like, hey, this is not working for a couple of weeks. That's fine. Not working for a couple of months. Now I feel like, okay, now is it the strategy or is it something else? But if you see any professional trading, over time, there are going to be some drawdowns in there.
Yeah.
And what I did is I modeled my portfolio backs, my optimizations, and almost every single time I see periods of like up to 6 months of drawdowns of that. And then you have a massive runner later. So you can have a year which it's a 30% profit year, but in order to get that 30%, you had to withstand 6 months of like 1-2% losses every single month. And then you get 1 or 2 months which have each month 20-30%. So I mean, of course, I would love to be able to know when to stop it, to not get that drawdown, and then open it again. But that's almost impossible. So I prefer to ride the whole wave, and that allows me to benefit from the profits. But that takes the discipline and the courage to stick through the statistically normal drawdowns.
Well, on the other hand, you have a lot of freedom because you don't have to be there and like micromanage it. You can just let it run. You go do other stuff you care about, and you can come back and kind of see results after a month or something.
Yeah, that's one of the great things. So last few months ago, when I went to my course in Europe, the Algo was having a really good run and had nothing to do. I didn't have anything to do. I could enjoy my course. I could enjoy the Norwegian fjords and just go and enjoy. I didn't have to be managing, or I didn't have to be worried like, oh, I need to get Wi-Fi now because I need to place trades. As a manual trader, I just knew that my algos were running well, and I just logged in once in the weekend to make sure, the BPS is running, the algos are running, there's no errors. They need to be managed, like in the technical side of running the things. And then everything else, the stats sides, just take care of itself while I was on holiday, essentially, and making money.
That's good. Tell me about some of the returns you've seen this past year with your algos. Like, what are the best runs? What are the drawdowns you went through, and kind of what you got out of it?
Yeah, so there was a pretty nice run. I mentioned to you, but I was, the algo was having a good time when I was on holidays in Norway. And during that time, it was a pretty good run in which we started like from the start of the run to more or less where it ended, the like high water mark. For that was something around like $30,000 of profit for that. So like that was in total around 3 months. But big part of that chunk came in just one single month. I don't really have the full numbers in my mind because I look at things on the big picture on the month to quarterly basis.
Right.
But I think it was like something around like 15 to 18% in the span of 2 weeks. And then the other parts of the month just kept, going a bit up, a bit down, a bit up, a bit down. But overall, in around 3 months, had around 30K of profit, which is pretty nice, especially when part of that is when you are just enjoying the Norwegian fjords from your balcony room.
Very cool. Now, one thing that will be different a lot is like how you scale the capital, because like you mentioned 30K, but someone with like a $1,000 account might not get 30K in a month for sure. But tell me about how you went through scaling up your account and kind of growing that capital. Did you go with prop firms? Did you trade your own capital, and kind of how do you go about it?
Yeah, so it was a mix. I always started with my own capital. So whenever I have my portfolio or update stuff, and even for our Algo Nation members, whenever I update stuff, I usually first try it on my own capital. So maybe the first step would be, okay, you have running demo just to make sure there are no technological errors. There is no or wrong order, there is no coding issue that's going to affect the things. But as soon as I have like a few days, 1 week of trade having in place, there are no errors, just go to live immediately. And I start running it there with a small, it's like 5 to 10K account, depending on the moment on what's available as extra capital just to run the initial test of live. And then once it passes that, then I add it to my bigger portfolio. Or for our Algo Nation members, I add it into the tracking portfolio, which is a portfolio with only our Algo Nation strategies. And then in my bigger portfolio, I have other things. But that bigger portfolio has been grown over time. Over the past 3 years, I have been growing that portfolio with adding some capital myself, the profits itself that the algos have made, and from withdrawals from prop firms. But not necessarily prop firms, it's like funding programs. There are nowadays many funding programs that they are not like traditional prop firms that can allow you to have some of those profits. And the thing that was before really difficult, it was the rules for the prop firms are really hard for algo trading because you had like daily drawdown limit, which were pretty tight, and other things. And with algo trading, you never know if the drawdown, you're going to have a big drawdown in a couple of days, and then you go up again, or if you're going to have a slow drawdown over multiple times. So that didn't really match up well. But now with the changes in the preference the past 3 years, 3 or 4 years now, that have made it a lot better and a lot friendlier for that. So I had some capital from some of them that got funded with raw capital. Some of them later got closed because they were profitable, and they just told me basically a reason like, oh, well, you were trading the same strategy in this account and this other account, and you cannot trade the same, even though there were different strategies just using the same symbol. USD was in both accounts, but completely different portfolios. And they were like, no, we don't like it. So they didn't like it that I was making too much profit in the other one. But all of those like small withdrawals, small adding, just adding incrementally over time and building the account until now the size in which I was able to make the 30K on the 2 months.
Nice. So you earn money, you invest it to trading, and then you kind of grow your account that way, which is definitely the way to go. Yeah.
Yeah, let's say a scaling with personal capital and other funding. It's kind of like a bit of everything to get there. Because if you're trying to do only prop firms, it's possible to do and it's possible to get a thing, but then you are beholden to either the prop firm rules or that. And if there's any problem in that, or simply you have a couple of bad months and you pass their drawdown limit in your own account, that will be a drawdown and you can continue trading with that. But in the prop firm world, you have to go back to the valuation stage. You have to, but again, so that sets you up because sometimes you have a really good run and then you have a few bad months, and then again you have a really good run afterwards. So you may end up like spending or wasting your really good runs in the evaluations, and then like the normal curve of the returns. You have really good runs, and then you have mediocre returns for a bit, and then you have a run again. So you may end up in a like sideways part of your equity curve right when you get the funding, and then it takes a bit longer to get to the next goal. So having that has allowed me to get a bit more freedom of using them as it gave me extra capital, but they are not the main source. It's still my own capital for my trading.
I think anyone who trades prop firms should have for goal to build their own capital too. Like they should have an account on the side of it, their own capital. They save money from the prop firm, put in their own account, and kind of build that for over time too.
Yeah, I think that's the most reasonable way because you cannot see it as a salary in prop firm and just spend it all like many people do. I always see it as they just gave me more money that I can add into my capital, and then from my own capital, then I can organize myself how I want to spend. But sometimes there are cases in which they are like, hey, okay, let's see, it's having a good run. I'll withdraw half of the profits and spend it for next year's cruise or for the next trip. So that sometimes also do it. Like it's not like I just keep the capital there forever and just continue growing it. It's nice to have it there so you can have a cushion and you can exponentially grow the capital. But sometimes you pass it all there, you get a good run, you take some out of it and enjoy the fruits of the algo trading.
That's cool. Tell me about what your advice would be for someone who wants to get into algo. Should they get a strategy that's already available? Should they build their own? And how do they get results the fastest way possible?
Yeah, I see that there are mainly 2 options. You can either build your own thing or get something from someone else. So building your own thing can be really good for someone that is really tech inclined and they already know programming maybe, and they maybe are trading their own manual strategy. That could be a really good option, but that's not going to be majority of people. Majority of people are going to be like, okay, coding, it sounds like really hard. It's really complicated stuff, or statistics. I'm not really good with math. I don't want to do backtesting and that. So that's where having a partner that you trust that can get you essentially do that part of the work in which they are trading their own strategy that they're already using, and they are doing the backtesting and validation. And then you can either, essentially try to copy their work by trading what they are running, or shortcut the process. And when you want to do your own thing, you can get the algo, get their process, and then just tweak your process and make your own portfolio. So that's a lot faster and a lot simpler for 90% of people out there that may want to get started with algo trading, but don't want to take the time to develop their own thing or to pass like for me like 2 or 3 years of hard work going back and forth with statistics, analysis, coding, and things like that to get to the point. You can get there in a matter of a few weeks if you have a good support team helping you with their expertise already passing that stage.
I love it. Tell me where people can find you if they want to connect with you, and also how can they get the algos of trading?
Yeah, so if you want to connect me, you can find me at Decide to Trade. I'm one of the coaches here. I'm the resident algo specialist for Decide to Trade. Yeah, and right now we are reopening our Algo Nation program since we have the MT5 updates, which is something that has been a long time in the making.
Yeah.
In the making there, it's going to be a big change for the Algo Nation portfolio.
So 2 strategies that we trade with Algos, you can check them out. It's going to be linked below, the Algo Nation program. Now we're opening for a few days, so if you're watching this later, you might not be able to get in, but if you're watching this when it goes live, you might have some chance. We teach you 2 strategies. You have them fully coded, fully tested. We give you our recommended setting, the portfolio with it, the exact way we trade it. Check out the details below for that. You can always connect with Anil that way and ask any questions too. And make sure to subscribe if you haven't done yet. Hit the notification screen you think you would like, and we'll catch you back here in that video pretty soon.